It's fairly modest. I mean, when we look at the crisis enveloping this territory during SARS, it probably just fell off a cliff. We're not getting that this time, are we? Is it because people recognize what happened then and they're holding on, and perhaps things are not as bad as all that? Tell us your thinking.
Well, this is interesting because you look at it, people are focusing on the retail market, on the commercial market, whereas people are thinking that housing market is something long-term, and maybe this is a price point where we can get into the market. I mean, at least according to some. And social unrest or anything like that will blow over, let's say, in a couple of years' time, and housing is a long-term solution. So, and then besides that, there's no other alternative investment channels, if you will, and stock markets are not doing too great, and where are you going to put money? Breaks. So that's the thinking behind it. But of course, whether or not the economy is going to tank any further, and that will impact people's incomes and the perception of their incomes or future income streams, and that will impact housing prices.
Actually, unemployment and house prices have the biggest correlation, don't they? Really?
Correct. Yeah, we did a study, Hang Seng Index correlation with the housing prices, and basically housing prices lag by 3 months to 6 months, because Hong Kong is so singularly financial market driven. So Hang Seng Index is really a good benchmark for the economy.
David, we talked about how the retail market has been smacked, sales down 20% year on year. How do you see the retail property market playing out?
Well, I think the rental market in the retail sector, the street front shops are going to take a huge hit because of this. Before that, there's already a changing pattern of mainland shoppers from luxury goods to mid-price goods. That's already impacting on the rents of the street front shops in the busiest areas. Now that the tourists is not coming, and that's going to have a even further impact on those shops. Perhaps there's a silver lining in this is that the community malls, not the ones in the front streets, but the ones in the back end of the streets who are selling daily goods, having a better trade than the rest of us, because the people are still not going to the business areas to shop. But that's something that perhaps a small relief to the whole situation.
Can the government provide some kind of support to ease the pain?
Well, I guess the government, there's a little that the government can do apart from what they have said in various announcements. The business, the landlords probably will have some kind of rental relief to the small shoppers, retailers. But in the end, we have to look at the shoppers' behavior, because we were so rely on mainland tourists and tourists in general to pop up our retail industry. I mean, is that so easy for everybody to switch to community shopping the day we were, as it were? I think that's not realistic. So the current downturn will persist for some time.
Let's just talk away from Hong Kong and talk about the housing market also in China. How's it doing in the different tiers that we have for the cities there? Because you can see a wide divergence.
Yeah, I think it's, again, something to do with the economy, because economic activities, in the end, it was actually focused on first-tier cities, especially during a downturn or a slowdown. So despite government's efforts to rein in prices in the first-tier cities, the demand is still heading towards first-tier cities. And of course, when we look at the Greater Bay areas, where there's a relief measures for Hong Kongers to buy houses, and I think this area is actually going to benefit from the rest of the, away from the general country, as it were. So this area is going to benefit, but in the end, it's the economy that has to drive the house prices.